Most people think CEO pay is already out of control, but this new deal makes every other paycheck look tiny. Elon Musk just got approval for a pay package that could be worth up to $1 trillion. Yes, trillion with a T. And before you think that's an exaggeration, it's not. Shareholders actually approved it. More than 75% of them voted yes. They knew how massive it was, and they still said, give them the chance. So what's going on here? Why would investors, funds, and fans bet the future of Tesla on one man? And what exactly does Elon Musk have to build to earn $1 trillion? Let's break this down, because this deal is unlike anything the business world has ever seen. This deal isn't like a normal salary. Musk doesn't get a paycheck, he doesn't get bonuses, he doesn't even get stock unless Tesla hits targets that no other company has ever hit. According to reports from Reuters, shareholders approved the plan in November 2025. It's structured as 12 tranches. Each tranche unlocks new Tesla stock if Musk leads the company to extreme milestones. Let's start with the first one. Tranche 1 unlocks when Tesla hits a $2 trillion market value. To get there, Tesla must also deliver 20 million vehicles in total. For perspective, Toyota, the world's biggest automaker, sold about 11 million cars last year. That means Tesla would have to nearly double Toyota's output while keeping its premium pricing. That's already wild. But the Tranche 2 is even harder. It requires Tesla to hit a $2.5 trillion valuation. And they need 10 million active full self-driving subscriptions. That means millions of Tesla owners paying monthly for its driver assist software. If that happens, Tesla's software revenue could rival Apple's App Store. The third target is pure science fiction made real. To unlock it, Tesla must reach a $3 trillion market cap and deliver 1 million Optimus robots. That's Tesla's humanoid robot project, machines designed to do physical labor in factories or even homes. If that becomes real, Tesla wouldn't just be a car company anymore. It would be an AI and robotics empire. And that's only the halfway point. By the way, if you're enjoying this so far, do me a quick favor. Hit the like button. It tells YouTube that people love learning about business stories like this. And if you want more easy-to-understand breakdowns just like this one, subscribe. All right, let's keep going, because it only gets bigger from here. By the fourth tranche, Tesla must launch 1 million robotaxis. These would be fully autonomous cars working as self-driving taxis. They'd turn every Tesla into a money-making asset. At that level, Tesla's market value must hit $3.5 trillion. Then the deal shifts from products to profits. To unlock Tranche 5, Tesla must reach a $4 trillion market cap and earn $50 billion in EBITDA. EBITDA, basically profit before accounting tricks, is what investors actually care about. It shows if a company can turn dreams into cash. Tranche 6 raises the bar again. $4.5 trillion valuation, $80 billion in adjusted EBITDA. Tranche 7 pushes it to $5 trillion and $130 billion in profits. At that level, Tesla would rival Apple or Microsoft in yearly earnings. By Tranche 8, Tesla needs to hit $5.5 trillion and $210 billion in EBITDA. Tranche 9, $6 trillion and $300 billion. Those numbers are bigger than the entire annual GDP of many countries. Tranche 11 requires Tesla to hit $7.5 trillion. The operational target hasn't been revealed yet, but it likely involves breakthroughs in AI, robotics, or energy. Finally, Tranche 12, the endgame. Tesla must hit an $8.5 trillion market capitalization. That would make it the most valuable company in human history. To get there, Tesla would have to multiply its current value by roughly 6 times. And even if Musk earns those shares, he can't sell them for at least 7.5 years. They're locked. He only gains voting rights right away. That means he gets more control, but not more cash, at least not yet. This new plan is even bigger than his legendary 2018 deal. Back then, Planck capped out at a $650 billion market value. Back then, people laughed. They said it was impossible. But in 2021, Tesla's market cap crossed $1 trillion. Musk earned billions, and those same critics went quiet. The 2025 plan makes that earlier deal look small. It's not just about making cars or profits anymore. It's about transforming Tesla into something else entirely, a global leader in AI, robotics, and automation. If Musk hits all the goals, Tesla's stake in Tesla could grow from about 12% to 25%. It's the control he says he needs to safely guide Tesla into the age of artificial intelligence. So why did shareholders vote for it? First, the vision. Tesla's board argued that extraordinary pay makes sense for extraordinary results. Musk only gets the reward if Tesla becomes one of the largest companies in history. If he fails, he gets nothing. If he succeeds, everyone wins. Shareholders' value could grow from 1.5 trillion to 8.5 trillion. This is the purest form of pay for performance. It's the kind of deal venture capitalists dream about. High risk, high reward. Second, the loyalty. Tesla's investors aren't like other investors. They're fans. Many are retail shareholders, ordinary people who bought Tesla stock because they believe in Musk's vision. They've seen their early investments multiplied by hundreds of times. To them, betting on Elon feels like betting on progress itself. And third, the fear. Musk warned that if shareholders didn't approve the plan, he might step back from Tesla. He might focus on SpaceX or his AI startup xAI instead. Losing Musk could crash Tesla's stock overnight. To many investors, keeping him was worth almost any price. The vote wasn't close. Over 75% said yes. But of course, not everyone agrees. Critics call it the most excessive CEO package ever written. They say it's proof that corporate pay has gone too far. Norway's sovereign wealth fund said this is key person risk. That means Tesla depends too much on one person. If anything happens to Musk or if he walks away, the company could stumble. But here's the paradox. If he actually hits those goals, Tesla will have changed the world. We'd have millions of robotaxis on the road, factories full of humanoid robots, and a car company more valuable than every other automaker combined. The milestones tell the story. They don't reward him for building more factories. They reward him for creating artificial intelligence, humanoid robots, and autonomous vehicles. That's the new Tesla mission. And Musk is locked in for the long term. Those shares are frozen for 7.5 years. He can't cash out and walk away. That keeps him tied to the company's fate. In return, he gains more control, up to 25% of Tesla's voting power. That gives him the ability to pursue massive bets like building fleets of AI-powered robots without fear of being overruled. Let's look at what the big picture is. If Musk succeeds, Tesla becomes more than an automaker. It becomes the company that built the robots, the self-driving cars, and the AI engines that run the global economy. Its products wouldn't just move people, they'd reshape entire industries. And if that happens, this trillion-dollar deal might not look crazy at all. Remember, in 2018, the idea of Tesla being worth $1 trillion was called absurd. 3 years later, it happened. Maybe history is about to repeat itself, just on a much bigger scale. If Elon Musk actually pulls this off, Tesla won't just make cars anymore. It'll make history. If you found this breakdown interesting, hit that like button. Drop a comment with your thoughts, and make sure to subscribe for more simple stories. Thanks for watching, and I'll see you in the next one.